numbers than you have. So you said you have 73% liabilities, yeah, and this is also what I have. Yeah, do you see this? Yeah. So for 2019, I have the same number as you. Pretty much the same. Yeah. So it's only a rounding number, but I have the same as you, and here I also, if you look at the calculations. Oh, sorry. If you look at the calculations, here is also the net profit margin. You see that? We already also calculated it before. Yeah, 21.2%. Yeah, this is the same. You got this the same answer as I did. Yeah, and you can. I did it. I also did it for earlier years. Yeah, for example, in 2018, was a little bit higher. Yeah, but this is also because net income in 2018 was a little bit higher. Yeah, you see that? And then it went down. Yeah, so and the net profit margin was also a little bit higher. Yeah, so I did a couple of calculations here. Yeah. Yeah, but to our question, is this good or is it bad? Actually, it means, first of all, it means that most of the assets are calculated with are financed with a liability. But let's have a closer look at the statements of Apple. Yeah. So we have to look at which statements do we have to look at when we wanna see the financial position, the liabilities, and the equity. Which financial statement is it? Exactly. So let's look at the balance sheet. And let's look at what they have. So you're right. Yeah. So they have more liabilities than they have equity. More liabilities than they have equity. Yeah. So 73% is liabilities of the total assets, and only 26% is equity. Yeah, but we have to have a closer look at the balance sheet and see what are the assets of Apple. So what are the main assets of Apple? If you look at the assets, let's look at them in 2019. Assets in 2019. What are the most important assets? Yeah. So what they have a lot is marketable securities. Yeah, this is in current assets section is marketable security. In the non-current assets, there's marketable securities. And what do you think is marketable securities? Does this have to do with the main purpose of the business model of Apple? What is this marketable securities? Any idea? This is essentially fixed income securities, and Apple can turn those securities, those bonds or bills, yeah, into cash every single day. Yeah, and if you look at it, how much it is, and if you add cash to it, then you see that Apple essentially has a lot of cash or securities, bills or bonds that the company can very, yeah, and this makes Apple safe, yeah, because if you have a lot of cash and marketable securities, which is very safe securities, this is government securities, very safe, then the company is quite stable. Because think about what could Apple do with the cash and the marketable securities. They could pay down their debt, their liabilities immediately. Yeah, which is a quite favorable position for them. Yeah, so you have to take that into perspective. Yeah, and if you take that into account, you see that actually the net liabilities, yeah, aren't that high because you can use the cash and pay down the liability immediately. Apple doesn't do it, yeah, because they think, okay, we do not have to do it, but they could, yeah, and this is a very comfortable position. Yeah, does that make sense? Yeah, so if you have a lot of cash, and marketable securities in the case of Apple is essentially cash. If you have a lot of cash, this is good. Yeah, if you have a lot of cash, you can use the cash and pay down your liabilities. Yeah, and this makes the liabilities, I would say, less severe because Apple could do it any single day. They just do not do it because they say, okay, we don't have to do it. Our creditors, they don't force us to do it, but we could do it. Yeah. Can you calculate? We already we talked about the profitability. We said it's generally Apple is a very profitable company. We said it is profitable for 2017, for the year 2018, for the year 2019. We said it went up in 2018 and when it went down a little bit in 2019. We calculated the net profit margin. It was about 21%. Could you also calculate the return on equity? What is the return on equity for Apple? Return on equity. What's the return on equity? Yeah, net income divided by equity. Net income divided by equity. Have a look at how it is calculated. Where do I have it? Do you see it here? Net income or net profit divided by equity. So let's do that. Try to do that for 2019. Do it for 2019, and then tell me your answer. Net income or net profit divided by equity. Do it for 2019 and do it for 2018. I give you 5 minutes. Then tell me your answer. Okay, Liang has calculated. This is, you can also see it here at my statement. So I have this is auto here. So this is very high. Yeah, this is very high. And so what does it mean for Apple? Is this good for the shareholders or bad? Yeah, very good, Jan. Yeah, it's better. It's better for the shareholders because it means that Apple generates a high net income in comparison to the shareholders' equity or with the shareholders' equity. And this is good. This is better for the shareholders. Yeah. Here you see, by the way, in my Excel sheet, you see I calculated a net income growth rate. Yeah, this is here. And I also calculated a earnings per share growth rate. And do you see that the earnings per share growth rate is always a little bit higher than the net income growth rate? Do you see that? Yeah. And the reason is, what is the reason? Why do earnings per share grow faster than net income? Do you remember? What does the company do? Why do outstanding shares go down? And earnings per share grow faster than net income? Do you remember that? No, it's because of buybacks. Yeah. Again, look at here. Look at how earnings per share is calculated: net income divided by average number of outstanding shares. So if average number of outstanding shares goes down over time, earnings per share grows faster than net income. Does it make sense?
Yes.
Yeah? Okay, all right. Good. Okay, what else do we have here? We have, please have a look at the statement. Tell me about profitability, the financial position. So profitability, we said Apple is profitable. Yeah, net income, net profit margin is high. Financial position, we said, okay, you calculated the leverage, liability to equity ratio, and you said it's 73%, which is relatively high amount of liabilities. But then we said, okay, they also have a lot of cash, which is good for Apple. Yeah, so which is a good thing. So they have high leverage, but they also have a lot of cash, which is good. Next thing, please have a look at the statement of cash flow. Yeah, so your task, please have a look at the statement of cash flow. Does the firm generate a lot of cash? Yeah, because the cash we looked at was on the balance sheet. This is how much cash do they have. The statement of cash flow is about how much cash do they generate in a year. So look at the statement of cash flow and tell me, do you find the statement of cash flow? Then tell me a little bit about the company. Five minutes time. And then you tell me something about Apple. Yeah, so where is the statement of cash flow? Where is the statement of cash flow? I have it here. So it's the statement of cash flow. Look at it and tell me a little bit about, do they generate a lot of cash, and what are the sources of cash, and how do they use the cash? So take 5 minutes and look at the statement of cash flow and then tell me a little bit about it. So what about the cash flow of Apple? What can you tell me? Do they generate a lot of cash flow? Okay, cash is mostly generated by operating activities, Raychan. Very, very good. So what does that mean?
They sell many iPhones and iPads.
Exactly, yeah. So they sell many iPads and iPhone. This is the operating activities of Apple. And so this here, this is the operating activities. Yeah, so it is if you remember our discussion from the cash flow statement, this is the indirect method. Why is it the indirect method? It starts with net income. It starts with the bottom line of the income statement, and then you add back certain, for example, depreciation and amortization. You add back certain items, and then you come up with cash flow from operating activities. And as Raychan said correctly, yeah, this is relatively high. This is relatively high, and that means they are selling a lot of iPhones and iPads, and they are getting a lot of cash for the iPhones and iPads. Have a look at capital expenditures. How much do they pay for capital expenditures? Capital expenditures is payments related to acquisition of property, plant, and equipment. Is it a lot or is it rather a low percentage? Look at the investing activities. Have a look at the investing activities. What do they do with their cash? What they generate with out of the operating activities? What do you see under investing activities? Okay, yeah, so they selling a lot of marketable securities, and they are also buying marketable securities. So this is all. This is a lot of things going on here. They're buying and selling, but more or less here they are converting cash. Either they converting cash into marketable securities, or they are converting marketable securities into cash. Where is property, plant, and equipment? The investments in property, plant, and equipment. Do you see that? Yes. Is this much, Liam? if you compare it to what they generate by operating activities? Yeah, it's relatively low if you compare it to what they generate here. This is what they generate. And this is what they invest into property, plant, and equipment. It's relatively low. Yeah, so they have to invest relatively little into machinery, into property, plant, and equipment, if you compare it to what they generate from operating activities. Yeah, for example, I calculated that as a percentage here. If you look at this, is the operating cash flow. Yeah, this is the operating cash flow. Oh, sorry. This is the operating cash flow. And this is the capital expenditures. Capital expenditures is capital expenditures into the payment in property, plant, and equipment. Payment for property, plant, and equipment. And this is relatively low if you compare it to the operating cash flow. It's relatively low. And what I did here, I calculated a free cash flow. And the free cash flow is operating cash flow minus capital expenditures, minus the payments in property, plant, and equipment. And you see that there is a lot left. Yeah, even after paying for property, plant, and equipment, there's a lot of cash left. Yeah, so for example, in 2019, there's 59 billion US dollar is left after investing for property, plant, and equipment. This is what we call free cash flow. So what else do we have? What do we have to look at? We already said Apple buys back their own shares. What about dividends? Please have a look at whether you find how much Apple pays in dividends. Have a look at the statements. What about their dividends? Do they pay a lot in dividends? Have a look and then tell me. Do they pay a lot of dividends? Have you found it? Did you find it? Okay. Then have a look at the cash flow statement. And I give you a hint. Have a look at the financing activities. Cash flow. It's under the financing activities. Then have a look what Apple pays in dividends in every of those years. Okay, what is it called? The line? Very good, yeah, very good, yeah. So this is the relevant line, and you said it goes up. That's correct, yeah, it goes up. And is it much that they pay out as a dividend? If you compare it to, let's say, the buybacks, the repurchases of stock, which are in the line below. Not much, yeah, but they are really using a lot of cash for buybacks, for repurchases. They are using a lot of cash for buybacks. They are using not so much for dividends. Yeah, do you see that? Much more for buybacks. Yeah, much more for buybacks. And actually, this is really a lot. See that, the buyback? This is, they are using pretty much they are using about pretty much the same as they generate from their operating activities, about the money they generate, operating activities they use for buybacks. It's really much, yeah. So this is really huge, yeah. So let's look at our questions. Profitability of Apple. So tell me about, if you can you see these four questions now?
Yes.
Yes. Okay. So then, in your own words, tell me a little bit about the first one. What about the profitability of Apple? Is it profitable?
It's profitable.
Okay. Liang says it's profitable. What's again? What's the net profit margin? Do you remember what did we get for net profit margin?
Net profit margin or the gross profit margin.
Yeah, let's take the net profit margin.
Okay.
How much was it? Yeah, Liang let 21%, and 21% is good. Yeah. So, and it was also good in the other years. So profitability of Apple is very good. What was our return on equity? Again, remember? What was our return on equity? Here you can also have a look if you do not remember it. What was it in the last years? Yeah, but let's first talk about the return on equity. Is this high or is it low? It's higher, and that is very good for shareholders. Yeah. Okay. Then let's talk about leverage. Let's talk about the liability to equity ratio. Here, what about that? What can you say? What can you say about that? Very good, yeah. Very good. Okay. So what about the cash flow, statement of cash flow? What can we say about that? Does Apple generate a lot of cash? Yeah. Yeah, it's selling a lot of iPhones and iPad, and that's why it has a lot of cash generated by operating activities. Okay. Then the payout policy. What about buyback? What about buybacks? And what about dividends? Yeah, yeah. Yeah, very good. And Liang, what is higher? Yeah, buyback is much higher than dividend, and you're really paying, using a lot of cash for buybacks. Yeah, they are really using a lot of cash for buybacks. Actually, the investment into property, plant, and equipment, which is fixed assets, machinery, and so, isn't that high for Apple. They do not need, obviously, a lot of tangible assets, yeah, to run their operations. Do you see that?
Yes.
But instead, what they do, they use most of their cash for buyback. Yeah, use most of their cash for buyback. So then one question was about, tell us whether Apple issues own shares. Do they issue own shares? Have a look at the statement of cash flows. Where do you see it? Where do you see it? Yeah, very good, Jan. And is this much or is it low?
I think it's low.
Yeah, it's low. If you compare it to the other figures, if you compare it to dividend, and even more if you compare it to repurchases, they do not issue much new shares. Okay, so generally we can say, I think we can say Apple is a very good business. Why? Because it is very profitable. Yeah, it has a high profit margin. We calculated the net profit margin. We also calculated the gross profit margin. We've seen that it's very profitable. We've seen that it has a lot of cash and marketable securities on the balance sheet with which it can buy back its liability very easily. Yeah, it doesn't do it currently, but it could every time. Yeah, and then we've seen that it is not only profitable, but it also generates a lot of cash. Yeah, doesn't only generate a lot of income, profit, but also cash. Yeah, mostly by selling a lot of iPhones. Yeah, they do not need so much cash for property, plant, and equipment. They do not need so much cash for property, plant, and equipment. And that's why they can distribute much cash to shareholders. Mostly, they distribute cash to shareholders via buybacks. Yeah, they do not pay so much dividends, but mostly they buy back their own shares. Yeah? So that's and that's why the number of shares outstanding go down over time. Yeah, so less shares outstanding because there are more buyback. So overall, very good business. What about the stock? Is it high or is it low? You looked up the stock price. What was it? Is high. Yeah, it was. I think it was 370. What is it correct? 370. Yes. Okay. So and again, what was our price earnings ratio? The price earnings ratio, as you remember, is the price per share, which is 370, divided by our earnings per share. And the earnings per share are 11.89. So 370 divided by 11.89. 89. This is the price earnings ratio, PE ratio. Plus earnings ratio. And what was that? That was 31, wasn't it? 31. Okay, so you said this is high. Yeah, this is high. And why is it high? Probably. Why is it high? Because the other shareholders, they like Apple. They like Apple and they buy it, and then the share price goes up. Yeah, it goes up and 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 up. Yeah, and the higher the share price goes, yeah, this is the share price, the higher is the price earnings ratio. Yeah, does that make sense?
Yes.
Okay. So very good company, but unfortunately the stock price is relatively high, so it's expensive. Yeah, for us, if we want to buy the stock, it's expensive. Okay. Are there any questions? So far, so good. Okay. Then I wish you a very nice afternoon. Enjoy your afternoon, and